Hello all and welcome to another video where today I'll be taking you through an internal accounting systems and control mock exam. So this video will be split into two parts, or part one being questions 1 and 2 and then part 2 being questions 3, 4 and 5. Just before we make a start, if you're looking to boost your chances of passing this exam, be sure to go over to my website, www.willborman.co.uk, and check out my group revision sessions for this unit. And there's also another internal accounting systems and control mock exam available to purchase on there if you're looking for additional material. Anyway, let's get on with the mock. I hope you do find this useful, and remember, if you do, please hit that like button and subscribe to the channel for more AAT videos. So for the INAC exam, you'll have 2.5 hours to complete all 5 tasks, and there are 100 marks on offer. So throughout this assessment, there will be 3 written tasks, which we'll be going over in full as I go through this mock walkthrough. So let's make a start then with task 1. So task 1 is worth 25 marks, and this task is about the purpose, structure and organisation of the accounting function. So this one will all be multiple choice, drop down type questions. So there will be no written elements as part of task 1. So let's make a start then. So this task contains parts A to C. You've been asked to review and develop a policy on ethics and sustainability for implementation over the next few years. Part A, identify whether each of the following would be a way to improve ethics and sustainability for 3 marks. So the first statement then, replacing current diesel delivery fleet with electric vehicles. So we know there is an association with electric vehicles that they are more environmentally friendly due to them producing fewer emissions. So therefore, especially the diesel vehicles, so that would therefore improve sustainability for the organisation. The next one, review lists of suppliers to ensure that materials are always sourced from the cheapest supplier in the marketplace. So this potentially could be good from a profit perspective, although not necessarily, because we don't know what the quality would be like on those cheaper materials. However, it would definitely not improve ethics or sustainability for the organisation. As I said, it could potentially improve profits, but it also may not do. But if we think about the cheapest is often going to be sourced from overseas, and therefore we think about the environmental impact of getting those materials to the business, it's obviously going to be a lot more than if it was locally sourced. So that would not improve ethics and sustainability. Okay, and then the last one, as part of the annual performance review, ask employees to identify areas in which they require additional training. So this would improve ethics and sustainability. So a little bit on the ethics side, because you're looking at potentially professional competence and due care, making sure that that CPD is done, making sure that employees have the right skills to do the jobs that they're doing. And it also, from a sustainability perspective, this would fall under social sustainability because it's upskilling existing employees, which is good for both the business and the individuals. So that one would improve sustainability. Okay, moving down then, you are training Fergus, a new junior accountant who is joining your team. You feel that in order to provide the best training to Fergus, it is important that he understands the purpose of both internal and external accounting information. Fergus has told you that he has recently studied stakeholders and the use of financial information. Part 2, identify which one of the following is not an external stakeholder. So we've got on offer here banks, customers, directors and suppliers. Well, we know that banks, customers and suppliers are all external stakeholders, and this question is asking which one is not an external stakeholder. So that would therefore be directors. Directors work for the business, so therefore they would be internal. Okay, moving now to part 3. Complete the following statements about stakeholders and the use of financial information for 6 marks. The financial statements produced at the end of the year are 4, and we've got internal, external, and the board of directors use. So we need to select the correct option here. So the financial statements produced specifically at year end would be for external use. So they can be used, well, in fact, we're going to move straight onto it here. They can be used by, and we've got to select the bank, general public, or shareholders to enable them to make informed decisions. So out of those three options, I would say that there are two that could apply here. It could either be bank or shareholders. I would say it's less likely that the general public are going to make informed decisions based upon the financial statements. So I'd say it's either going to be bank or shareholders. So let's just hold off for a second and have a look what the rest of the statement says. So it would either be they can be used by the bank to enable them to make an informed decision on, and we've got a loan application, well, that would definitely apply, so that's a possible. A dividend payment, that would have nothing really to do with the bank. And an investment strategy, again, that could be linked to shareholders, so let's just hold off on that one. So that will enable the business to expand. Okay, so that last section here that will enable the business to expand, that lends more to the business borrowing in order for them to be able to use that money to expand. So I'd say the most appropriate here would be bank to be able to make an informed decision on a loan application that will then enable the business to expand. And then the next sentence, something, management information, does not need to comply with a conceptual framework for financial reporting. So let's have a look. So we've got all internal or external. So external information does need to comply with a conceptual framework. So that's where your IRSs, your IFRSs come in, because they give us a set format for how to treat certain items within the financial statements. However, internal management information can be basically whatever format the business decides is useful to them. So it would be internal management information does not need to comply with a conceptual framework for financial reporting. If the business is looking to review and expand its production levels, it will use we've either got budgeted production report, statement of cash flows, or statement of profit or loss. So I'd say out of those options, it's going to be a budgeted production report. If the business is looking to expand its production levels, obviously naturally that would fit with the current budgeted production report to see how many they're making and what the capacity is to make more. And then lastly, this type of decision will be made by, and we've either got shareholders, the bank, or directors. So with it being an internal decision, the most likely out of those, with shareholders being a questionable whether they're internal or external, for the purposes of AAT, we do say external. However, they do fall into a bit of a middle ground. And then we've got the bank, which is external, and then directors. I would say for this one, the directors would make that decision. It's an internal business decision as to how they best utilize their capacity, and therefore the most likely one to deal with that on a day-to-day basis would be directors. Okay, scrolling down. A new working from home policy has been introduced to improve staff morale and as a way to save employees both time and money in respect of travel to work. You will need to ensure that appropriate data is kept securely and that data security regulations are not breached. Part B, identify whether the following statements relating to the software and hardware needed for the move to remote working are true or false, for 4 marks, so 1 mark for each. The first one then, cloud accounting will allow staff from a variety of locations or offices to access the accounting data. That one's absolutely true. I think that's fairly self-explanatory, but cloud accounting, as long as you have access to the internet and an internet browser and laptop, then you should be able to log in and access that data from anywhere. So that one would be true. Next one, hardware costs are higher if an organization uses cloud accounting. Quite the opposite. Because the servers are kept by the software companies, it would actually mean less hardware because there wouldn't need to be a server kept by the business because it's all stored within the cloud. So that one would definitely be false. And then the next one, if cloud accounting is used, businesses are much less likely to lose data. I would say on balance, that one would be true, just because the data will be backed up again to their, as in the software, it will be backed up to their data servers, and therefore they are more likely to be very secure. So because they're backed up, I would say that they are less likely to lose data than if it was stored, say, locally on someone's laptop. Okay, and then the last one, data is always secure if stored remotely. Absolutely not. That would be false. So it's more secure, but not completely secure. So obviously there still can be, break-ins, data leaks, hackers, that sort of thing. Could, in theory, still get access to that data, but it would be much more challenging. Okay, moving down then. So as part of a review on data security, you've been working with Fergus to review the data and operational security policy. Fergus is unsure which type of risk the following circumstances demonstrate. Part 2, identify the correct risk for each statement below. The first statement then, you decide that to save time, you will leave your laptop in your car overnight. To ensure that it is safe, you will put it in the boot. Nice. Okay, that's not sounding too good. So let's have a look at our options. So the risks here, so we've got 5 on offer. So we've got unauthorized remote access. So that's unlikely because it would be turned off and in the boot of their car. So unlikely that there will be remote access. Phishing, same as above really. The laptop would be turned off in the boot of the car. So unlikely that will be a problem. Loss of data, again, really falls into the top 2. Unless the laptop is on, then it's unlikely for there to be a loss of data. Physical loss of equipment, that's obviously much more appropriate in this circumstance, just in case someone were to break into the car and steal the laptop. So that one is the most likely, I believe, but let's have a look at this 5th one. So data issued in error has nothing to do with this. So it would be physical loss of equipment, because obviously if someone were to break into the car and steal the laptop, that would be loss of equipment. You receive an email from a supplier's new email address that asks you to click on a link in order to access their new bank details. So again, let's have a look at the options. So out of the 5, so we've got the same 5 options. If they are basically asking you to click on a link to enter new details, that is usually a sign of phishing. So that's where they can then take your personal details, use them for fraudulent purposes. So that one would be phishing. Next one, so 3rd one, Grace, your office cleaner, has unplugged the main server in order to plug in her vacuum cleaner to clean the room. Okay, so let's have a think about this. So definitely not phishing. Unauthorized remote access sounds very unlikely unless that vacuum is being used as a hacking device. Loss of data, that one seems a lot more likely, because if the main server has been unplugged and hasn't been backed up before it's been unplugged, then any data that had been worked on before the last backup would be lost. So that would therefore be loss of data. The 4th one, Hattie has decided to deactivate her antivirus software as it makes her PC too slow. So I don't think this would link to phishing or really loss of data or physical loss of equipment. Definitely nothing to do with that one. So it would be between unauthorized remote access and data issued in error. Well, again, she's not actually issuing any data here. The antivirus software wouldn't prevent her issuing that data. So I would say the most likely there is unauthorized remote access, because as part of most antivirus software, it has malware detection. So that would prevent somebody remote accessing your laptop. So the most likely there would be unauthorized remote access. And then the last one, you are rushing to send a quote to an existing customer, and to save time, you do not look up the email address as you can remember it. Okay, I think we know what this one's going to be. That would definitely link to data issued in error. So basically being sent to the wrong customer. Okay, let's have a look at part C then. So as the business continues to grow and the amount of data required to be processed rises, the time taken to process data and produce reports is increasing. Fergus knows that his previous employer was introducing data analytics, but he is unsure what this means. To assist Fergus, you have produced a training document which includes a brief statement to describe the different types of data analytics. Part C. Identify the correct option in response to each of the following statements about types of data analytics for 4 marks. So the first statement then creates an accurate estimate of what is likely to happen. So we've got 4 different options and they are the 4 different types of analytics. So with these, I would say that the best method, if you're not 100% sure, is to first look for the ones that you are more sure about, to then leave the ones that you are less sure about, hopefully with less options available. So this first one then creates an accurate estimate of what is likely to happen. So that is taking previous data and then coming up with a future estimate based upon that past data. So because of that, the most likely option would be that it is predictive, because that is exactly what it's doing. It is predicting what is likely to happen. So that would therefore be predictive analytics. So then the second one, reports produced using historical information by finance teams on a regular basis. So this is looking at past information. So it's definitely not going to be predictive, because it's not predicting anything in the future, it's just reporting on what's happened in the past. Therefore, it's not going to be prescriptive either, because the prescriptive stage would be the last stage of analytics. So here you're looking for either diagnostic or descriptive. Now, the main difference between these two is that descriptive is more what has happened in the past, and diagnostic is more why has this happened. So on balance, out of these two, I would say that the most likely here would be descriptive, because it's not looking at the why, it's just looking at what has happened in the past. And then our third one, recommendations based on internal data and external information. So taking both internal and external information and making recommendations would be the most complex type of analytics, and it would therefore be your prescriptive analytics. It's usually the last stage within the analytics process, and it enables the business to make key decisions based upon suggestions that come out of performing prescriptive analytics. And then the last one, finding the reason for an exception to a trend. So this is what I was saying between the difference for descriptive and diagnostic. The key here is finding the reason for the exception. So therefore, that would relate to diagnostic analytics. Okay, moving down then. So the last question for task 1. You are now writing a report on the potential introduction of data analytics within your organisation. The board of directors are keen to know more about data analytics before making a decision. Harvey, the finance director, has been told that the following statements are advantages of using data analytics in the workplace and has asked you if this is true. Part 2, identify whether the following statements about the advantages of using data analytics in accounts are true or false for 2 marks. So the first statement, data analytics uses a variety of techniques such as critical thinking, logic, and complex quantitative methods in order to create accurate future predictions. So that would be absolutely true. That is the whole point of data analytics. So that first one would be true. And then the last one, data visualization is relevant to all data analytics. So this one would be false. So although it's very useful for descriptive analytics and looking at historical information, it is less useful for such as prescriptive analytics and even to an extent diagnostic, because although you could argue that it may help to see where there's exceptions to trends, it doesn't really necessarily explain why unless we look at the raw data. So although it is useful for some analytics, it's not useful for all. Okay, so that finishes off task 1. Let's now move on to task 2. So then task 2 is worth 25 marks, and this task is about the types of fraud in the workplace combined with ways in which it can be detected and prevented. And for those who've watched my 5 tips to pass INAC video, you'll know that when you're writing your answers within this question, obviously on the written questions, to make sure that your answers are tailored towards fraud, even if it doesn't specifically mention it within that part of the question, because this whole task is related to fraud. Okay, you'll see how that comes in later on when we're answering some of the written tasks. So this task contains parts A through to D. Enable Limited has warehouses across the country, but due to the geographical distance between them, it is impossible for the senior management team to count the inventory on a regular basis. However, as the warehouse staff have been with the business for some time, senior management know that they can be trusted. Enable Limited's warehouses have several deliveries and dispatches every day, and they are operational on a 24-hour basis. Recently, the number of orders has increased substantially. The company holds an annual delivery contract with a national courier who collects the goods from the unlocked delivery area of the warehouse. All customers are on 30 days credit, so this gives time to sort any issues such as missing or damaged items. Regular stock takes are completed and adjustments to the inventory records are made. So then part A, complete the following statements for 4 marks. The above may result in the occurrence of, and then we've got to select from 3 options. So we've got inventory, monetary, and time-based fraud. Well, looking at this scenario, there is a clear problem or possibility that could create inventory fraud. It's already stated at the top that senior management cannot, or it's impossible for them to count the inventory on a regular basis. It also states further down here that we have an unlocked delivery area of the warehouse. So obviously it would be quite easy for somebody to come in as it's unlocked, steal inventory, and obviously they wouldn't know who had taken it. So therefore, in this scenario, it would be a strong possibility of the occurrence of inventory fraud. And that occurs as a result of, and we've got 3 options. We've got lack of controls, lack of leadership, and lack of monitoring. Now, although there is a somewhat lack of leadership here because the leadership team aren't checking the inventory, they don't necessarily have to, and they have assigned management to do that. So we can also discount lack of monitoring because the senior management are still checking the inventory. They are doing regular stock takes, as it says within the question. So the opportunity here really occurs because of lack of controls. Because they don't have any sort of physical measures in place to prevent someone taking the inventory, it would be seen as a lack of controls. Now, moving on to the next part, in order to address this risk, you need to implement, and we need to select from a series of physical controls, which is what I've just spoke about. So I would say that is going to be the most likely option. Or we've got a segregation of duties, which I don't see being a problem here. And the authorization and approval process, again, isn't really relevant in this scenario. So therefore, the thing that would prevent this fraud from occurring would be a series of physical controls. And then lastly, it says this will ensure that the impact on, we've got to select between assets, income and liabilities. Well, as inventory is an asset to the business, it would be assets. Excellent. Moving down then. So Sarah Taylor, Operations Director, has taken the decision to sell directly to the public from the company's warehouses. The warehouses have space for the public to view the products in a small showroom with an unlocked office at the back. There's a theme here of unlocked offices, unlocked warehouses. It seems to be a very much anyone can come and go at this business. Anyway, moving on. Although the showroom does not have dedicated staff, there is always a member of staff nearby to deal with customer queries, as staff are regularly moving items into the delivery area for collection. Customers are left unattended to view goods in their own time. It's been noted that there has been some theft and damage to goods, but management believe this is at an acceptable level. A PDQ machine to take card payments has been put into the office. Ian Priest, the warehouse manager, is expected to run the end of day process each evening before he leaves, provided he has time. All instructions, including override codes and cards, are left with the machine to ensure that any member of staff can access these if needed. A computer and printer have also been installed to enable invoices to be prepared and sales to be recorded. The computer is not password protected, so that any members of staff can raise sales invoices when required. As there are no network points in the office, a weekly backup of the data is done using an external hard drive, which is sent to head office for inclusion into the accounting system. Part B then, identify 4 weaknesses in the system that may result in fraud occurring. And Part 2, recommend an internal control for each weakness, giving a reason why it will help prevent fraud. So Part 1 then, identify 4 weaknesses, is worth 4 marks, so that will be 1 mark for each weakness identified. And then we can see Part 2 is then split between 2 points really. We're going to have 1 mark related to recommending an internal control for each weakness, and we will have 1 mark for giving a reason why it will help prevent fraud. So for part 1 then, when we're answering or identifying our 4 weaknesses, we just need to make it very clear to the examiner what is causing this possibility of fraud. So when I'm marking mock exams for this particular exam, sometimes I see answers which are too brief, i.e. they don't really identify what's causing the opportunity for fraud. So I would make sure when you're answering these to be very, very clear as to what the weakness is within the system that could create the opportunity for fraud. And you'll see when I start going through some model answers or what I would put, how to structure these, and hopefully that will help within your exam as well. So there are quite easily 4 weaknesses here. I don't think there's any problems identifying these, and I don't think in general from what I've seen that students do find it difficult to identify the weaknesses. It's just getting them down on paper in a clear and concise way. So let's have a look then at our first weakness and see how we should go about answering this. So in terms of what I would go with, I would really start off by looking at this unlocked back office. So we can see here in this second line, it states that the warehouses have space for the public to view the product in a small showroom with an unlocked office at the back. So straight away, we can see that could create an opportunity for fraud. It sort of goes on as well to say here that although the showroom does not have dedicated staff, there'll always be a member of staff nearby to deal with customer queries, but realistically, that isn't good enough, okay? So let's, for now, focus on this unlocked back office. So first of all, we need to state our weakness. We need to identify this weakness that's going to create the opportunity for fraud. So I would go with something on the lines of the back office has been left unlocked and at times unattended. Within the office, there would be access to a computer which is unlocked, which it states down here. It does say the computer is not password protected. So in theory, with you having an unlocked back office, you've also got a computer that is also unlocked. Someone could just wander in there and hop straight on the computer. But now we need to be specific in how that creates an opportunity for fraud. So we've said that within the office there will be access to a computer which is unlocked, and therefore anyone could access this and create fake orders or invoices. So that right there is your opportunity for fraud. Okay, if this computer was completely blank, there was nothing on there, then although someone could go into that back office and hop on the computer, they wouldn't be able to do anything. But it specifically states in the scenario, a computer and printer have also been installed to enable invoices to be prepared and sales to be recorded. So therefore, on this computer, there is the ability, the software for somebody to go in and create now a fake invoice because it isn't password protected. So we have very clearly outlined there what the weakness is and why it may result in fraud. So the next part here is we need to recommend an internal control, and then we need to say why it will help prevent fraud. So I will be very clear to the examiner here. I would say an internal control, because there's no mistaking then what you're referring to prevent this would be physical controls, such as a lock on the back office and password protecting the computer. Now, it doesn't have to be rocket science, this. It's a very simple solution, but please don't ignore the obvious. That would be the best solution and the most simple to help prevent an unauthorized person accessing the computer. I have seen when marking these in the past, people take them too complex where we've got like retinal scanners and fingerprint recognition. Well, for a starting point, let's just get a password on the computer. That will certainly help. And now we just need to explain how that does help. So how does that help to prevent fraud? So I would say something on the lines of, this would mean that only those who had a key to the back office and the computer password would be able to access the system. Again, it's very simple. We're not making these over complex. So that covers our first weakness. Let's now move on to our second weakness. So going back to our scenario, I would probably dive into the lack of supervision within the storeroom. So it states here, customers are left unattended to view goods in their own time. It has been noted that there's already been some theft and damage to goods. Now, management believe this is an acceptable level, which is a little bit odd, but there you go. It seems like there's a clear way of reducing this. However, that's for you to pick up within the scenario. So again, coming back to not overcomplicating things, state the obvious. So I would say something on the lines of, another weakness would be that customers are being left unattended within the showroom. Again, we now need to be very clear on how this creates an opportunity for fraud. So this could lead to customers taking goods while colluding with staff members to ensure that no staff member is in the showroom at a specific time, enabling someone to take goods without being there to prevent them. Okay, if I could spell specific, there we go. So we've been again very clear on what the weakness is within the system and why that would lead to the possible occurrence of fraud. Let's now recommend an internal control for the weakness and give a reason why it will help prevent fraud. So being very clear again, the internal control for this would be to ensure that a member of staff is always within the showroom when the showroom is open to customers. Again, very straightforward. By having a member of staff within the showroom at all times, it would be far less likely that a member of the public would steal items from the showroom as it's being supervised. Okay, so that's your second weakness. We've stated very clearly what the internal control would be, and again very clearly as to why it would help prevent fraud. So let's now move on to our third weakness. So going back to our scenario to have a look what possibilities we've got, I would probably talk next about this PDQ machine. So we've said that the PDQ machine is supposed to run at the end of every day, but right here we've got a little line that says provided he has time, and therefore it's clearly not always being run. Now, in terms of what that means, because it's not being run every day, if inventory were to be taken or card payments that were missed or not processed on purpose, so someone such as a member of staff or a member of the public could take items, they could pretend to pay, but because that process is not being run every day, it makes it much harder to track if inventory were to go missing, to actually pinpoint what day that were to occur on. Because if it were being run every day, it would be much easier to spot discrepancies and therefore potentially pinpoint which day this was occurring. So I would say for the third weakness, would be that the PDQ process at the end of the day is not always being run. This could make it more difficult if the business were to have items stolen or transactions missed, to be able to pinpoint which day it occurred on. An internal control to prevent this would be to ensure that the PDQ process is being run every day. A reconciliation should then be performed to show any differences. This would then highlight any discrepancies as early as possible. Now, how would that help to prevent fraud? Well, by finding these as early as possible, this would ensure that differences are highlighted quickly and deter staff from colluding with customers, as they'd know the reconciliation was being done daily. So that's our first three weaknesses. And again, we've highlighted how they could cause the opportunity for fraud. We've said what the internal controls are, and we've given reasons as to why it will help prevent fraud. Let's have a look at our fourth weakness then. So scrolling back up, I would probably talk about this computer with it not having any sort of link to the head office. They're having to do weekly backups. Now, the problem with that is obviously someone could create fake orders or invoices again, and that would take a long time for head office to be able to find that out because it's not linking to their system. They're relying on this weekly backup, which would then need to be checked anyway. So by the time it was checked, it would be a lot harder for them to see when it was happening, what it related to, etc. So that is a problem. Most modern day systems would be linked to the head office system. So let's speak about that then. So the PC where invoices are raised is not linked to the accounting system. This may lead to staff manipulating financial information, and it would be very difficult for the business to know that this was being done because they have no way of monitoring the system. Again, a relatively simple fix to this. So an internal control for this would be for the business to implement a cloud-based software or a software which links directly to the head office finance system. This would ensure that it would be monitored by the finance team, which would make it far less likely that the data could be manipulated without it being picked up much sooner. So that details our 4 weaknesses. We've given our internal controls and reasons why they will help prevent fraud. Hopefully that does give you an idea of how much I would be writing for each one and how I would structure each answer. Just be very, very clear to make sure that they are related to fraud and not problems within an accountancy system. It's absolutely fine to bring up problems within a system, but they need to be related to fraud. So if it's a case of that it would affect such as P&L figures, for example, authorization limits, these are all great things, but the only way you're going to get marks for them is if you can relate them back to the occurrence of fraud. So just be very, very careful. So moving down then, it says you work as part of an accounts department. As part of your AAT studies, you learned how to produce a fraud matrix and you are keen to put this technique into practice. You have identified a number of areas where you feel that fraud may be possible. They are described below and you need to complete the fraud matrix. Part C, identify the appropriate rating for each of the situations given below. So let's have a look at our first situation here, and you'll be selecting a rating from low, medium or high. So the first situation then, let's have a look. When the business first opened, it was decided that it was unnecessary to implement a formal system for ordering raw materials. Since then, the business has increased turnover by more than 150% and has recently reviewed and updated the system to ensure that a full process for authorization is now in place. So it states very clearly there that they have implemented and updated a new system to ensure that authorization is now in place. Now previously I would say that the rating would have been high, but because they've now already got this system in place, that would have lowered the rating on this situation to low. If they've got a full process in place for authorization, then they've done as much as they can to mitigate the risk. So therefore the rating would be low. The next one, you are reviewing the payroll system and discover that the system is backed up at the end of the month to an on-site server. You have a high turnover of staff, so do not always complete pre-employment new starter checks. The payroll is completed by the receptionist, as they have the relevant knowledge and qualifications to complete this work. So I mean, straight away here, this is definitely going to be high. This here, where it states that they do not always have pre-employment new starter checks, is a huge problem. So I wouldn't be worried about this bottom bit, the fact that it says payroll is completed by the receptionist, they've got relevant knowledge and qualifications. That's absolutely fine. If they've got the relevant knowledge and qualifications, no problem at all. The problem in this scenario is this here. If they do not complete pre-employment new starter checks for every staff member, the rating is automatically high. It means that the business might be employing someone who, for example, doesn't have the right to work in the UK, in which case, straight away, that is illegal. So the rating would be high. And then the bottom one, training is a key priority for the business, with each department ensuring they have a well-trained member of staff for each role. However, as cash flow is increasingly difficult, it was decided at this point it is unnecessary to have 2 members of staff trained for the same role. So this one is a great example of where the medium rating comes in. They're saying that they do have people trained in the right roles. However, the reason why this wouldn't be low, and I would go with medium, is because if that person were to go on sick, if they, for example, were on holiday, then there isn't the relevant cover in place to be able to cover that role. So therefore, the rating would be medium for the organisation, because it's always good to have somebody who can cover a role if, as I said, someone, for example, were to go on sick leave or just purely for holiday cover. So if you do want some more practice on these, if you head over to the AAT Lifelong Learning Portal and go to the real life scenarios, you can find some more examples of these that you can actually have a go at yourself, so it gives you a great idea for the exam. Okay, let's move on then to the last task on task 2. You have discussed the system of ordering and accepting goods into the warehouse with Ian Priest, the warehouse manager. You have identified the following risk with this system. There is no system to check and record items as they are received and they are left at the door of the warehouse. Often items are found to be damaged or missing. Part D. Outline how you can monitor, review and report on the risk described for 6 marks. Now, being completely honest, I don't love these questions because I think monitor and review are very, very similar. However, I did a separate video just on monitor, review and report to try explain the best I can between the differences between these three. I also give an example scenario and how I would answer that one. So if you want anything extra on this topic, I do have that video separate from this, and I'll leave a link to that in the description of this video. Okay, so we have here a very clear issue. There is no system to check and record items as they are received, which would then obviously lead to some being damaged or missing. So the way that we need to format these is I always put the risk right at the top. I then go on to say how we would monitor this, how we would review it, and how we would report on the risk. And this is 6 marks, so I would write 2 points for each one. So 2 points for monitoring, 2 points for reviewing, and 2 points for reporting. And that's how you're going to pick up your full 6 marks. So let's give this a go then. So as I said, firstly, I would put down the risk. So the risk is there is no system in place to check and record deliveries. This could lead to items being stolen or damaged. Now, I don't think there's any marks in writing the risk. However, it lets the examiner know very clearly what you're about to set out. So it is something I would still recommend doing. So let's start off then with monitor. And I said you'll need 2 points for each of these. So monitor. One of the main ways that this business could ensure that there weren't items going missing is to first check the purchase orders to what has been received. It's a very straightforward process that every business should employ, although clearly it's not being done here. So I would start off by saying the business should check purchase orders to what items have been received. So that is our first point on monitor. You do not need to go into much detail on each of these. You are just outlining. So that would be my first point for monitor. My second point, I would probably say something on the lines of checking how many items have been damaged over a period of time to see how big a problem this is. They should also check the reports to see how many items have been damaged over a certain time period. So we know that they are monitoring this to a certain extent because it states that often items are found to be damaged or missing, so they must in some way be monitoring this. They know that items are being damaged. So I would be reporting on that to see how many have been damaged over a certain time period. So if there's particular times that it's worse than it is others, etc., certain months, certain delivery companies, etc. So then we can move on to review. And as I said, review is very similar to monitor. There is only slight differences. If you want the full breakdown of that, I would watch the other video that I've done. But in essence, it is a more detailed action than what monitor is. So monitor is very high level, whereas review is slightly more in depth as to what the business should do, following on from monitoring the scenario. So for this one, the business could review its processes. So they usually do that through an internal audit. So that is an audit that they request. You can either do it internally with your own staff, although it's generally not as effective, or you can actually pay for another business to come in, do an audit for you, and then they can recommend any weaknesses. So I would say, which, you know, it wouldn't take a genius to tell them really what's going wrong here. But anyway, the business should perform an internal audit to identify areas of weakness within the system. They could also check with the delivery company as to why items are damaged or missing. Maybe it's part of their processes that are also not quite right. So I would put down the business should be checking with the delivery company. Obviously, particularly if this is happening quite often, and the supplier as to why the items are damaged or missing. Because we really need to know, is it the delivery company where there's problems, or is it the supplier where the problem lies? Now, in terms of reporting, I would say that these can be quite generic, or they often are generic. So I would say something on the lines of, for report, as I say, these can be quite generic because they're going to be the same sort of thing every time, which is how do we communicate what we found under the review stage. So the business could create a report detailing the value of inventory that had gone missing or was damaged. So again, that would be my first point. And then another option they could have is the business could also produce a graph to show which days or months there was a higher number of damaged items or missing items. Both of these should be reported to senior managers. So that outlines how we should monitor, review and report on the risks described. As I say, 2 points for each to ensure that you get maximum marks on this task. And if you do want a more in-depth view, remember to go watch the video that I've linked in the description where I go through another full example. So that finishes off task 2. So that finishes off part 1 of this mock walkthrough. Up next, I'll be covering task 3, 4 and 5. Thanks again for watching. I'll catch you in part 2.